Welcome back to the deep dive. Okay, today we are strapping in for, well, probably the most crucial snapshot of the travel industry, the roadmap for the end of year season.
Yeah, that's right. September through December 2025.
Exactly, the holidays, biggest quarter for bookings, really the ultimate test of post-pandemic recovery, you could say.
Mm-hmm.
So today we're unpacking a massive global demand generation market snapshot. We're analyzing intent and actual bookings across 5 key regions.
And it's a really privileged view of the market, actually. It lets us see not just where travelers are thinking of going,
Right.
but how they plan to get there, where they plan to stay. So our mission, really, is to quickly synthesize this dual intelligence from Asia Pacific, Europe, North America, Latin America, and the Middle East and Africa.
Okay.
We want to identify the KPIs, spot the key demand drivers,
Yeah.
and, highlight where traveler behavior has fundamentally shifted, basically turning raw figures into, well, tangible strategic advice for you.
And what makes this deep dive so powerful is that dual lens, right?
Mhm.
We're pulling info from 2 sources at once.
That's key.
Flight intelligence from Navigator 360, that's the search and intent, and then hotel metrics from Demand 360, showing the committed bookings.
Yeah, and that contrast between desire and actual action, that's where the real learning happens.
Absolutely. Okay, let's jump right into the data then, because Q4 2025 looks like it's being dominated by 2 regions. And the flight search numbers, they're pretty staggering.
Okay, segment 1, flight demand renaissance. When we compare the growth in flight searches for Q4 2025 against the same time in 2024,
Right.
the difference between the fast movers and the, let's say, steady performers is pretty stark. This tells us exactly where traveler intent at that initial planning stage is really exploding right now.
And the undisputed frontrunners here are the Middle East and Africa, MEA, and Asia Pacific, APAC.
Definitely.
Let's start with MEA.
Mhm.
Okay, so we're looking at a plus 43% increase in international flight searches, which is strong, definitely strong.
Solid growth.
But here's the really interesting bit, an astounding 58% increase in regional flight searches. 58%. Why is that intra-regional movement surging so much faster than international interest?
Well, that 58% is a massive indicator. It points to accelerating recovery within those markets.
Okay.
It means MEA isn't just relying on travelers coming in from, say, Europe or North America. The population itself is activating.
So local demand.
Exactly. It
Right.
speaks to a strong, re-engaged local or regional travel economy that's finally translating, pent-up desire into active planning. It's a sign of maturity, maybe resilience, too.
And APAC is carrying that same sort of regional recovery flag, though maybe with a slightly different flavor.
Kind of, yeah. They show a huge 51% increase in regional flight searches, also very strong.
51%. Wow.
And coupled with a very strong 33% increase in international searches, too.
Okay, so both regions focusing inward, but maybe with different levels of outbound global reach still?
Precisely. Now, contrast that with the more, let's say, established markets. North America, NORAM, it's very stable, robust, plus 28% international searches, plus 27% regional. Pretty balanced.
Okay, steady growth.
Yeah. And Latin America, LATAM, is the most moderate, showing plus 8% international and plus 12% regional search growth.
Right.
So the insight here for you is clear. If you're a supplier, especially an airline, the intent is hottest in MEA and APAC right now. That signals where your marketing energy will likely yield the fastest conversion returns this quarter.
Absolutely. Those percentages are like flashing neon lights, telling us where travelers are actively starting their crucial end-of-year trip planning.
Okay, segment 2, destination puzzles and channel preferences.
Right, so we've established where people are searching. Let's see if that enthusiasm actually translates into committed bookings, because sometimes the dream destination
Doesn't quite match reality.
exactly doesn't match the wallet or maybe the hassle factor. And we have a fascinating search versus book anomaly kind of hiding in the Asia-Pacific data here.
Yes, this is a classic example of, let's call it travel friction. When we look at the APAC destination data, Japan is the #1 search destination.
The dream trip for Q4, right?
The aspirational one, yeah.
Yeah.
But when you look at the top booked destinations, Japan drops all the way down to #6.
Wow, okay. That's a substantial conversion lag.
It is.
Yeah.
And we see the reverse for Taiwan. Taiwan is the #1 booked destination.
#1 booked.
Yet it only ranked #6 in the search rankings.
Huh. So what does that suggest?
Well, it suggests that while aspirational interest is really high for Japan, the actual commitment to book seems, well, maybe easier or more frictionless for places like Taiwan. And it seems driven by specific fast-moving origin markets like Taiwan itself, India, and Vietnam.
That highlights a really interesting friction point for marketers, doesn't it?
Yeah.
Why is commitment so easy in one place and the conversion maybe more challenging in another?
Mm-hmm.
But that idea of regional divergence, it extends directly into how people book their hotels, too. It's not just where they go.
It's the channels they trust.
Exactly.
It definitely is. If we analyze the year-to-date hotel booking channel mix, the habits are, well, they're wildly different across regions. And maybe we should be clear about the terms here. When we say brand.com, we mean the hotel brand's own website.
Right, like Marriott.com or Hilton.com.
Exactly. When we talk about direct bookings, that usually means things like property walk-ins, call centers, other direct channels not processed online through the brand site.
Got it. And OTA.
OTA is online travel agency, think Expedia, Booking.com, Agoda, those types.
Okay, definition's clear. So with that in mind, North America's habits, they look pretty unique. Brand.com holds a massive 40% share of hotel bookings there.
40%. That's huge. That extreme reliance on brand.com loyalty and direct online engagement is far outpacing every other region.
Wow. What about the other channels in NORAM?
Direct bookings, the non-website ones, are at 27%, and OTAs are sitting lower at 17%.
So in NORAM, travelers seem really loyal to the brand's digital experience. They go straight to the source online.
Seems like it. Now compare that to Europe. Brand.com share there is 25% lower, while direct bookings are higher at 32%.
Okay, different balance. More offline direct, perhaps.
Perhaps. And then you look at MEA. It's heavily weighted toward those direct bookings, 51%, half the booking.
51% direct, wow.
Yeah, with brand.com sitting much lower at only 16%.
Okay, that's a massive difference from NORAM.
It is. And the takeaway here is absolutely critical. You cannot run a standardized global channel strategy. It just won't work. North America trusts the digital brand site, while MEA relies much more on a non-digital direct approach, maybe due to market structure, local B2B habits, who knows?
Fascinating. You really need to know your audience in each specific market.
You absolutely do. Okay, segment 3, hotel performance and lead time behavior.
All right, let's look at the hotel KPIs.
Moving into the hotel KPI leaderboard, we see continued price divergence. And just to keep the metrics clear, we are comparing year-to-date metrics for the September-December 2025 period against the same time in 2024.
Got it.
So ADR is average daily rate, RevPAR is revenue per available room, and Europe, officially the most expensive region, it's clocking in the highest ADR at $226.
$226. Okay, that certainly supports the idea that Europe remains a premium destination. But where are we seeing the healthiest growth overall? Like balanced growth across the board?
That title, interestingly, belongs to MEA yet again.
MEA again, okay.
They're showing the most significant positive growth across every key metric. Occupancy is up 2.8%, ADR is up 2.3%, and RevPAR is up 1.8%.
So everything's moving them together.
Right. That robust increase across the entire spectrum signals a very healthy, balanced market recovery. Both volume and price are climbing together there.
Okay, but let's look at a true anomaly maybe.
Yeah.
In North America, we noted their flight search numbers were strong and stable earlier.
Right, very consistent.
Yet, NORAM's hotel occupancy rates are actually showing slight declines compared to 2024. For all 4 months in this Q4 period, November is the most noticeable dip at minus 2.6%.
Yeah, that's right. September is minus 0.2%, October minus 0.3%, November minus 2.6%, and December minus 0.4%. Slight dips, but consistent across the quarter.
Wait a second. North America has stable flight searches, the highest brand.com loyalty we just talked about.
Yeah.
But dipping occupancy, what is happening there?
That is a critical divergence, isn't it? It suggests that while the intent to travel is there, the conversion isn't flowing into traditional hotels quite as strongly as it did last year, relative to supply maybe.
So where are they staying?
Good question. Are we seeing business travel lag behind leisure recovery? Or is this perhaps a significant shift toward alternative accommodations, the so-called Airbnb effect, where travelers are searching for flights but then booking their stay outside the traditional hotel ecosystem? Or, as you hinted, has supply simply increased faster than the stable demand? This kind of missing segment. That's what hotel strategists in NORAM need to figure out.
That makes the next data point even more important then, the urgency factor, revealed by booking lead times. This tells us about the planning habits of that traveler they're trying to capture.
And here again, we see a dramatic split between regions. The shortest lead times indicating high urgency or, last-minute planning are clearly in APAC.
How short are we talking?
A whopping 67% of bookings are occurring within 30 days of arrival,
Oh,
two-thirds.
67% within a month. Wow.
Yeah. So you need real-time marketing, immediate actionability for that APAC traveler. They decide late.
And Latin America. You mentioned they had moderate search growth earlier.
They're right there with APAC in terms of urgency, actually. Specifically, if you look at the Caribbean subregion, 53% of its bookings fall into that 0 to 7 day window.
Over half booking within a week.
Within a week, yeah. People are making decisions very, very quickly there.
Okay, so high urgency in APAC and parts of LATAM. What about the others?
Well, contrast that high urgency with Europe and North America. They show much more planning stability, longer lead times.
Okay.
In Europe, the 31 days and above segment accounts for 35% of bookings. So about a third of their business is planned well in advance.
A third planned over a month out.
And in North America, that long lead segment is actually the largest. It accounts for 47% of bookings.
Nearly half.
Nearly half of NORAM travelers are booking their Q4 trips months ahead of time.
That is just a fundamental behavioral difference, isn't it?
Huge difference.
So if you're marketing to a North American traveler, your optimal digital marketing window is much, much longer than if you're targeting an APAC traveler who seems to need immediate offers and actionability.
Exactly. Completely different approach is needed.
Okay, so let's quickly synthesize maybe the 3 most crucial takeaways from this deep dive before we wrap up.
Sounds good.
Number 1, those massive and quite divergent flight surges in the Middle East and Africa and Asia Pacific puts them miles ahead in recovery intent, particularly for regional travel.
Definitely a key point.
Number 2, the vast regional difference in channel trust, from North America's heavy reliance on brand.com all the way over to MEA's preference for those direct, often non-digital channels.
Can't ignore that.
And number 3, this incredible difference in traveler urgency we just discussed. APAC booking hyper last minute, while NORAM plans almost half their trips months in advance.
Yeah, and if we connect this to the bigger picture, the source material absolutely proves that the cornerstone of any effective demand generation strategy has got to be a deep, immediate understanding of these nuanced regional behaviors.
Right.
I mean, ignoring the channel preference we saw in segment 2 or the lead time differences in segment 3, you're just leaving substantial revenue on the table. Simple as that.
That's the ultimate strategic insight, isn't it? Know your audience, region by region. And let's maybe build on that strategic challenge just before we go. We noted the extremely healthy growth in both flight searches and hotel KPIs in the MEA region.
Yeah, strong across the board there.
We saw how they prefer direct bookings for hotels, that 51% number. Now consider this. Despite this massive surge in demand and commitment, MEA has a very low GDS booking share for air travel, only 4%.
Right, and just to clarify for listeners, GDS Global Distribution System typically handles corporate travel and traditional, often offline, travel agency bookings. So yeah, that 4% in MEA is very low compared to Europe at 10% or North America at 11%.
Okay, so here's the thought for you, the listener. Given MEA's robust growth, its preference for direct hotel bookings, but its low reliance on traditional GDS distribution for flights. What does this suggest about the future, about digitalization and the evolution of traditional distribution models in that rapidly expanding market?
Interesting question.
Is MEA essentially skipping a step in the travel distribution lifecycle? And maybe, what opportunity does that present for new direct-to-consumer models or new technology platforms in that region?
That's an excellent point to mull over. Understanding which distribution paths are potentially being bypassed is really key to navigating future success there.
Definitely something to think about as you apply these deep dive insights.
Well, thank you for joining us for this deep dive into the Q4 2025 travel trends.
We'll catch you next time on the Deep Dive.